I often get asked, where can I invest my money? What stocks are good to invest in? I can no longer count how often I hear those words from family members, friends, and even comments on YouTube. It's hard to answer these questions up front because the situation of each individual is different. What I'm doing works for me, but may not be the same story for others. But what I can say is, there are basic things you need to know before you start investing in anything, may it be stocks, real estate, or even businesses. And by knowing these things, it will be easier for you to answer this question for yourself. So in this video, since my channel is all about long-term investing in stocks, I'll share 3 tips that you need to know before you even open a brokerage account. With that said, let's head on to the first tip. First off, have a goal. I've repeated this statement over and over again, and this is also what I say immediately when someone asks me where they should invest their money, because this is the starting. This is like setting up Waze or Google Maps to your desired destination. You don't just run off without knowing where you will go. Do you see how important it is? Before you even get to where you will put your money, you have to know first where you want to be in the future and what you want to get out of your investments. What is your time horizon? Do you want to gain passive income and retire from it? By having a destination to go to, you can create a path towards it, a plan, or a strategy. You can easily set out your milestones, which is a must, especially if you're a long-term investor. To understand this clearly, I'll set myself as an example. My goal in stocks is to attain financial freedom through dividends, because as we know in stocks, there are 2 ways you earn: capital gains when you sell the stocks you own, and through dividends which companies usually pay every year. Since I don't like actively buying and selling stocks, I want to get money passively through dividends. So with this, I have a goal in mind. I computed my estimated yearly expenses. This way, I have a clue of how much I need to invest to attain financial freedom. For example, if my yearly expenses are 400,000 pesos a year, or about 34,000 a month, by investing in companies that earn 4% dividends, I need to have 10 million pesos invested to earn this amount. With that, I set out my milestones, because 10 million is a long way to go, especially if I can only invest a certain amount every month. So my goal before 30 is to get 10,000 passive income a month, so I need at least 3 million on or before I reach 30 years old. By setting milestones, whenever I achieve it, it gives me a boost. It gives me that dopamine effect which can help you mentally. If you're only trying to achieve that end goal, if it's too far away, you'll exhaust yourself. You will lose momentum. That's why it's crucial to break it down. You can start with 1 million, 3 million, 5, 7, then 10. This way you will have a clear path towards your goal, plus momentum boosters along the way, so that you won't stray out of the path. Think of it like you're on a video game. You increase your level slowly towards your goal. So with all that set in place, you would know how much you need to invest to know how long it will take you to reach it with the amount you're contributing right now. This is how important this step is, but be careful in setting up your time frame towards your goal. It needs to have balance, must be attainable, and should also be challenging enough. This way you would try to improve yourself to the best you can to speed up the process. Remember to not forget this balance, because if you set your goals far off reach, you will exhaust yourself, and setting up your goals too easy would let you tend to slack off. Second, with goals and milestones in place, the second is to study the vehicle you will use to reach it. As for me, it's stocks, so I read books about it. Start with the easy ones like investing books of Peter Lynch, the Little Book series, or one of the best beginner books, Phil Town's Rule Number 1. Or start with general finance books like The Millionaire Next Door, Robert Kiyosaki's Rich Dad Poor Dad, Cash Flow Quadrant, etc. This is a must. Don't just dive straight into analyzing charts, financial statements, and formulas. By having knowledge, you will create a better strategy that will suit your goals. And the best part of it, you would be able to clear out the noise you see in social media, which is a must to survive long-term in investing. Books are a great way to start, especially if you have no clue whatsoever. Before you watch videos on YouTube, FB, or any blogs out there, you can easily filter out the BS and the useful ones. By studying, you would grasp the proper mindset of an investor. Wait, let's be specific, a long-term investor's mindset. A lot of investors fail to continue their strategy because they lack this trait. And the reason, because they don't know what they're doing. They are lost because they rely too much on content creators, just blindly following their steps. This is not only applicable in investing, but also in life itself. You easily believe the people around you because they are your source of knowledge. But if you read books before listening to them, then you have the knowledge of the people who really succeeded in life. They have proof of their work, unlike those on social media or some of your friends that only show or tell you the good things. the good trades or investments. I spotted a lot of this from friends or financial advisors themselves. Since I have prior knowledge of investing, when you ask the right questions, you can easily notice they are covering up something, or they don't even invest in what they're selling. Unlike my mentors whom I read in books, such as Peter Lynch and Warren Buffett, they have proof of their success. So this is a warning to those who want to start. Read books first because these people know their stuff. These people have proof of their success. Because why listen to those who don't even do the things they are saying? This will just lead you off track of your goals. Third tip, since you have the basic knowledge of the vehicle you will use, it's time to dive deeper. Invest only in what you know and understand. You only invest in the stocks you fully understand. Or if you don't want to do this, there's always an option for you to just invest in an index fund. These are funds that invest in the largest companies in the country. So by just buying one fund, you can indirectly own these companies. Such as in the Philippines, we have the PSE Index, which you can buy directly from your broker, which is FMETF. This is a fund that tracks the PSE Index. And if you want to invest in other countries like the USA, you have the S&P 500. So just find a fund that tracks that index. So you may be wondering, if we have that fund, why give us that long speech about studying books? Well, even though there is an easy way to do it, the one thing you get from it is the right mentality. Even though it's a fund, the price is also volatile, and in some cases, the price may not move for a long time. If you don't know that the stock market does these things, then you would eventually lose momentum and stray off the path to your goal. That's why it's important to understand the basic first. Now, if you're investing in individual stocks, then you have to diligently get the data of that company to assess if it's a good investment or not. If you don't know the free websites you can use to do this, I have a video about it. There's a link below. Do not skip this step for it will have a direct impact on your mental well-being. Imagine this, what if the stock price of the company you invested in falls hard? First company you have has good financials, solid growth, and well-handled debt. Second company has bad financials, years of negative earnings, and large debts on hand. So if I ask you, would you feel the same way for both companies if their price falls? Of course not. You would definitely be worried about a second company. For the first one, you may even be happy that you get to buy more of it at a discounted price. That's why this is the importance of knowing the companies you invest in first, because if you want to have a worry-free life in your investing journey, then better invest in companies you are willing to hold even when the market takes a downturn. Find companies you will be willing to buy more of when this happens. As Warren Buffett puts it, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. So analyze yourself first. Are you willing to do the hard work of analyzing companies individually, or just straight invest your money in a fund that tracks a certain index? Find what suits you better, as this would let you last longer in investing. So there you have it. You may have heard these things and just straight up ignored it, and simply went directly on the advanced knowledge of investing. But you will always come back to this, because at the end of the day, it all comes down to the proper mindset. Now before I end this video, it's definitely a hard task to find the right companies to invest in. Companies you'll be willing to hold for more than 10 years, so these companies should be strong, have a good growth history, well-handled debt, and should also be trading at a fair price. But for a beginner investor, how would you be able to know this? Where will you find the data for it? Well, look no further because simply Wall Street has your back. You no longer need to jump from website to website. They have countless of data for you, not only for local stocks, but if you're also investing in other countries, then they have it for you as well. They have graphs, comparisons, and all the data you need to determine if this company would fit your criteria. And there's more. They also have a watch list, that way you can easily be updated when your stocks release their earnings, when insiders are buying, and when the stock falls below your computed buy price. This helped me a lot in my investing journey. And speaking of buy price, if you don't know how to compute it, then they have it for you and let you choose two options, the ones analysts computed or discounted cash flow. There's more. They also have a portfolio tracker that gives you the health of your portfolio, detailed returns, dividends, diversification, and a lot more. So if you want to try it out, they offer their basic plan forever free, and if you do want to avail their paid plan, then by using my link, you can get up to 40% discount. So what are you waiting for? Try out Simply Wall Street. So with that, this ends this video for today. I hope you've learned something, and if you did and still haven't clicked the like button, be sure to do so before leaving. Thank you and see you in the next video.